What if inflation doesn't simply fade away as we hope? What if it persists, defying our expectations? Chamath Palihapitiya is a well-known figure in the financial world, issues a warning that demands our attention. He sheds light on the unfolding chapters of inflation, the unraveling debt markets, the struggles of the consumer, and the challenges faced by the tech industry and commercial real estate. Palihapitiya's insights are like a wake-up call, urging us to consider the potential consequences of these economic and market trends. Join us as we dive into the fascinating world of economics and explore Chamath's warning on the horizon. If you've been watching the economy closely, you might recall the first two chapters of inflation that played out in recent years. In 2021, we experienced what we call energy inflation. Remember the talk of sky-high gas prices nearly hitting the $10 mark? It caused an initial spike in inflation. Then in 2022, we shifted gears to goods inflation. Prices of various products surged due to increased input costs, burdening consumers. But what's catching the attention at the end of 2022 is wage inflation, a shift favoring workers over capital. With labor participation declining and unemployment potentially rising, companies will face challenges finding and retaining workers unless they offer higher pay. This could contribute to persistent inflation, defying the expectation that it will swiftly subside. So while we hope for a quick resolution, there's growing concern that inflation might not ease off as fast as we wanted to. But before we continue, we would like to welcome you to Capitalista. Please give a quick click on the like and subscribe buttons down below. And now, let's begin. Now let's focus on the pressing issue, the global debt crisis. It's no secret that both public and private debt levels have reached staggering heights. We're talking about trillions of dollars here. But what happens when the economy slows down? That's where things get tricky. With an economic slowdown, rising interest rates, and the lack of asset capital inflows, debt markets have faced significant challenges. The International Monetary Fund, or IMF, is a global organization that steps in to support these struggling debt markets. However, no matter what the IMF does, they often find themselves caught in the crossfire of criticism. It's a tough position to be in, like walking on a tightrope. Their actions are scrutinized, and they're blamed for not acting fast enough or for acting too aggressively. The truth is, the IMF faces a challenging task in trying to stabilize these markets and prevent a full-blown crisis. Chamath Palihapitiya says that there's been a shift in how investors allocate their capital. They're becoming more cautious and selective. Gone are the days of writing big checks to high-growth companies. Now, investors prefer smaller investments in seed and early-stage rounds. Why? Well, they don't want to risk setting high valuations or getting caught in a situation where additional funding is uncertain. This shift poses challenges for capital-intensive businesses, and those that require substantial investments face a tough road ahead. Many of them might struggle to secure the necessary funding. In fact, we could see a wave of company failures reminiscent of the dot-com bubble era. But amid all this, there will be winners and losers in the tech industry. The Googles and Amazons of the world will emerge as success stories. However, Chamath thinks things could get tricky for white-collar workers, especially those in mid-management roles. With companies tightening their belts and becoming more efficient, these workers may face job insecurities. He also thinks that consumers are piling on more debt than ever before. It's not just personal debt, but credit card debt as well. People are spending beyond their means, and it's becoming a concern. Now imagine the impact of rising mortgage rates. As interest rates go up, it becomes harder for people to buy new homes or sell their existing ones. That's not all. Layoffs are starting to happen, and the stock market shows signs of decline. These factors combined can put a major strain on consumer spending. In fact, there's a possibility of a consumer recession looming. It's a scary thought, as not everyone will be affected equally. Different segments of society will bear the brunt of it differently, and the pain won't be spread evenly. Moreover, Chamath Palihapitiya points out the challenges commercial real estate faces, especially offices towers in cities like San Francisco. These towering structures are now grappling with increasing vacancy rates. Picture this, increasingly more office spaces are sitting empty, waiting for tenants that may not come. It's a tough situation made even worse by the inability of building owners to meet their debt obligations. They took on loans with variable interest rates, and as rates climbed, their payments became unmanageable. So what happens next? Well, Chamath says it's possible that ownership of these properties could transfer to banks. They may even own a significant portion of the San Francisco downtown area. This predicament is not an isolated incident. Take the Blackstone bread situation as an example. Blackstone, a major commercial real estate market player, had to close redemptions for its bread product due to massive outflows. This indicates the severity of the crisis, where even prominent players are feeling the pressure. Now, the stage is set for a potential trillion-dollar trade deal between Russia and China, and it has caught the attention of Chamath Palihapitiya. This deal would focus on key sectors like energy, agricultural products, and rare earth minerals. Imagine the implications of such a massive trade agreement. It could deepen the economic ties between these two powerful nations, strengthening their alliance and potentially shifting the balance of power in global trade. But that's not all. This deal could also have far-reaching consequences for the US and the global financial landscape. One potential impact is the shift away from the US dollar as global reserve currency. As Russia and China increase their trade and bypass the dollar, it raises questions about its long-standing dominance. This could have significant implications for the US and its position in global power dynamics. Furthermore, Chamath Palihapitiya emphasizes the importance of resilience and caution in an uncertain market. In light of the prevailing uncertainties, he suggests considering investment strategies that prioritize safety. One such strategy is holding cash, keeping some of your funds on the sidelines ready to be deployed when the time is right. Additionally, investing in short-term treasury bills which are considered low risk can be a prudent choice. You can generate a steady and relatively safe return by owning these bills. Chamath also advises against trying to time the market or chase quick gains. Instead, he encourages staying resilient and remaining in the game, even if it means missing out on the initial rally. The goal is to preserve capital while waiting for the market to provide more certainty. You see, Chamath's warnings and insights shed light on crucial trends in the ever-evolving economic landscape. These are significant factors at play, from the chapters of inflation to the global debt crisis, the challenges faced by capital-intensive businesses, and the struggles of the consumer, and the potential trillion-dollar trade deal between Russia and China. He highlights the importance of staying informed and making informed decisions during uncertain times. It also encourages viewers to pay attention to the shifting dynamics and to be cautious with their investments. Chamath's message is clear that resilience and caution are key. So do you think Chamath's warnings hold weight? Will you stay informed and adapt to the evolving economic landscape? Let us know your thoughts in the comment section down below. That's it for this video. Don't forget to express your gratitude by clicking on the thumbs up button, following Capitalista, and enabling notifications to stay updated and won't miss any of our future uploads. See you next time and stay safe.